So we were doing bills of exchange, and now the next question is, see the next question. On January 1st, 2019, Shankar purchased goods from Parvati for rupees 8,000. This is the first transaction of this question, that someone is purchasing goods and someone is selling goods, and immediately drew a promissory note in favor of Parvati. This time Shankar is the purchaser of the goods and he himself is writing the note. That's why it will be a promissory note. Payable after 3 months, and the promise has been made for payment after 3 months. Now, on the date of maturity of the promissory note, whatever the date is, the Government of India declared holiday under the Negotiable Instrument Act 1881. So because it is declared on just on the date when the due date was there, that's why it will be called a emergency holiday. So in case of emergency holiday, what is the rule? The rule is that you will move to next working day for the payment. Since Parvati was unaware about the provision of the law regarding the date of the maturity of the bill, she handed over the bill to her lawyer. She handed over the bill to her lawyer. So because she was not knowing the rules properly, she has given that bill to the lawyer for collection, who duly presented the bill. She handed over the bill to her lawyer, who duly presented the bill and received the payment. And the lawyer has received the payment on her behalf from the debtor. The amount of the bill was handed over by the lawyer to Parvati immediately. Record the necessary journal entries in the books of Parvati and Shankar. So first transaction done here is that goods have been sold and purchased. Then afterwards, a bill of exchange has been written. So promissory note has been written. And after writing the promissory note, because there is no need of acceptance, because the purchaser himself is writing the bill, that's why there is no need of acceptance. So the moment he has written the bill and signed the bill, it has become bill of exchange. That bill has been handed over to the seller. So this is the second transaction. Then the seller has kept the bill with herself only. So she retained the bill till the due date, and giving to the lawyer is just a mere formality. Lawyer is the only representative on the behalf of his client. So there will be no issue for that. There will be no entry for that. And the third entry will be for the collection of the bill, for the payment of the bill. Now we will be doing entries. Now question is saying, record the necessary journal entries in the books of Parvati and Shankar. So you have to give journal entries in both of the books. So these we will give the name of the book, Journal of Parvati. She is the seller actually. And this will become Journal of Shankar. He is the purchaser. So now I will shift this question to the next page. So first entry will be done on the date January 1st, 2019. So here in the first line, I will mention the year 2019. Then I will write the date January 1st. Now Parvati is the seller of the goods and she is selling goods to the customer named Shankar. So that's why credit sale is there. Shankar debit to sales account. Shankar debit to sales account. and the amount of sale is 8,000. Now, in the same manner, Shankar will be doing entry 2019, and because he is purchasing goods on January 1, so here the entry will be purchase account debit 8,000 rupees is the transaction or amount of the transaction to Parvati, because he is purchasing goods on credit from Parvati. So that's why it will be recorded as credit purchase. I hope first journal entry is clear to all of you. Now second transaction will be what? Shankar is writing a promissory note. That is not a financial transaction, that will not be recorded. But the moment it is signed and given back to the seller, that will become a financial transaction. So that will also happen on the same date, January 1. January 1. And because she is getting a document, it will be called technically bills receivable from her view of point. That's why she will be recording it as bills receivable. Bills receivable account debit 8,000 to Shankar. Because this bill has been given by the customer named Shankar. Now what he will be recording here, January 1 on the same date. Parvati will be the receiver of the bill. Parvati debit 8,000 to bills payable account 8,000. Now next will be the due date. Now coming to the due date part. See, we have to calculate due date after 3 months. So the bill has been written on January 1st, January 1. Then first month will be Feb 1. Then next month will be March 1. Then next month will be April 1. Then I will count the 3 days. April 2, April 3, April 4. So April 4 will be the due date of this bill. But it is clearly mentioned here on the date of maturity of promissory note. Date of maturity is 4th of April. The Government of India declared holiday under the Negotiable Instrument Act. So it is an emergency holiday. So the next working day will be 5th of April. So exactly the due date will be now 5th of April. So on 5th of April, what Parvati has does, she has handed over the bill to her lawyer and he has collected payment on her behalf and given her payment. So now I will put the date here. April 5. And she is receiving cash or bank, whatever you want to use, you can use that. Cash account debit 8,000 to bills receivable account. $8,000. Now here again the date will be April 5 and the entry will be, because he is making the payment, he will be getting that bill back. Bills payable account debit, bills payable account debit 8,000 to cash account, bills payable account debit to cash account 8,000. So in this manner the journal entries will be completed. This is the whole question has been completed in the same manner. If any doubt is there, you can ask me, you can send me a message on WhatsApp. Now coming to the next question, and the new topic is when the bill is discounted from the bank. If you are discounting the bill from the bank, then what journal entries will be done? For that purpose, first you have to be clear about what is the meaning of discounting from the bank. Now I will explain you the same thing with the help of this previous question. See, first transaction will be always same because it need there should be a credit sale of goods. So there will be no change in the first transaction. Then there will not be any change in the second transaction also, because either the seller will write the bill or the purchaser will write the bill. So whosoever is writing and accepting, the bill has to be handed over to the seller because he is finally entitled to collect the payment. Now it is upon the wish of the seller that first option with him is that he can keep the bill with himself till the due date, and on the due date he can collect the payment as here we have done. But sometimes what happened in the business, that business needs cash every time for conduction of business. That's why we need cash most of the time. Now this bill will be kept for 3 months, as there is a time gap of 3 months. You have already read it in the question. Now, but the seller doesn't want to wait for 3 months. The other option with him is that he may go to bank. He will show the bill to the bank that I am having this bill and the customer will be making payment after 3 months. But right now I need the money. You please give me the money on the behalf of this bill. You keep this bill and give me money. And if somehow you are not able to collect the payment of the bill or the customer refuses to make the payment on the due date, then I will be paying you. This is the promise. So on that promise and on the behalf of that bill, what bank will does, bank will keep that money, keep that bill with itself, and bank will pay you amount. Suppose the amount of the bill is 8,000, bank will not pay you the complete amount of 8,000. Bank will deduct some interest charges according to the rate of interest and the duration of the bill. Suppose 500 bank has deducted. So then you will be getting only 7,500 and rest 500 is termed as discounting charges. So that's why it is termed here when the bill is discounted from the bank. This is called getting bill discounted from the bank. Now what is the advantage to the seller of this discounting? Advantage to the seller is that whatever payment he was going to get after 3 months, he got it immediately and he can conduct business more efficiently. And on the due date, obviously the customer will make the payment first thing. There will be no trouble. But somehow if he doesn't make any payment, then seller will be liable to make the payment to the bank. Means bank will always be secured. Either the customer will make the payment or either the seller will make the payment to bank. So bank has got a security and bank has earned some interest also. This is advantage to the bank. So now how to do accounting for such discounting, that only we have to learn in this question. However, we will be doing complete question. Now see the question. X sold goods to Y. So be careful about who is seller and who is purchaser. Sometimes students are doing correct entries, but because they get confused who is the seller and who is the buyer, the whole answer becomes wrong. X is selling goods and Y is purchasing goods. So we will be giving entries in both of the books. That's why here I will maintain journal of X and this is journal of Y. First I will clarify the books. Now in X books I will be recording a sale transaction and in Y books I will be recording a purchase transaction. And the date of the sale is 15th March 2019. So here again I will write in the first line 2019. I will put the year. You all have made journal now. You know how to write it. January 1. Now in books of X, I have to record sales transaction. So what is the sales transaction? Goods have been sold to Y. So Y debit and the amount of the sale is 10,000 to sales account. Y debit to sales account. 10,000. Now from the viewpoint of Y, it will be a purchase transaction. So January 1, sorry, the date I put it wrong here. The date is 15th March. March 15. March 15. On the same day, Y accepted a bill drawn upon him by X. Now this time, who is the drawer? The seller is the drawer. And he will present after writing this draft to Y and Y will give acceptance on that bill. So Y will accept the bill. Y has accepted the bill drawn upon him at 4 months. The duration of the bill is 4 months for rupees 10,000. So after 4 months, this bill will become due. X discounted the bill on 15th April. So first we will do journal entry for the acceptance given. Now on March 15 itself, March 15, this document will become bills receivable for X. Bills receivable account debit and the amount of the bill will be 10,000 to Y. Y has given the acceptance, that's why this entry will be done like this. Now we will record the same entry from the viewpoint of X, Y also. First entry will be purchase account debit. Y is purchasing the goods. Purchase account debit 10,000 to X because the goods have been purchased from X. Now again on March 15, acceptance has been given to X. That's why X debit 10,000 to bills payable. To bills payable account. 10,000. One more thing which I want to highlight here. You can compare that Y has been debited in the first entry with 10,000 and in the second entry Y has been credited with 10,000. So Y account is becoming practically nil. And one more thing is there that Y is our debtor. That debtor has been now converted into another account that is called bills receivable. And these debtors and bills receivable are collectively called trade receivables. In second chapter, if you will see the accounting terms, you will find debtors also, you will find bills receivable also, and you will find trade receivable also. Three terms you will find. So trade receivable is a component, having two components, debtors and bills receivable. So debtors has been converted into bills receivable practically. Similarly, in second chapter, you will find again three terms, creditors, X account, you can see here, X is creditor of the Y, and X account is also becoming nil here because earlier it was credited and now it was debited. And it is also converted into some liability that is named as bills payable. So one term is there, trade payables. Trade payable has two components, debtors and bills payable. Sorry, creditors and bills payable. Creditors and bills payable. So X was the creditor, and now this creditor has been converted into bills payable. So both are collectively called trade payable also. So you have to observe that how the debtors are converted into bills receivable and how the creditors are converted into bills payable. Okay, now coming to the due date. So we have to calculate the due date first thing. But here one more thing I will highlight. Now still here we have completed the question. Now afterwards see what is happening. X discounted the bill on 15th April. Means the bill was written on 15th March. The bill was written on 15th March and the duration was 4 months. But the bill was discounted. Obviously, who will get the discounted payment? The seller will get the discounted payment. Obviously, X was the seller, that's why X will discount the bill from the bank. And discounting date is April 15, just after 1 month. Means, it practically means that X has kept that bill for 1 month with himself only. And after 1 month, he decided that he should get the payment from the bank. So he has shown that bill to the bank, and bank has charged interest at the rate of 18% per annum. And why met the bill on maturity? That is a later transaction. We will record it later. Now X is getting the payment. Obviously, bank will always pay the amount in his bank account debit. Bank will never pay cash amount in the exchange of the bill. We will see how much amount bank will give. Obviously, bank will give some less amount. Bank will charge some interest on this bill that is technically named as discounting charges. And discounting charges are expenses of the X. Discounting charges account debit. X has to incur some expense to bills receivable. Now bank will collect this bills receivable from X. This bill will be now bank will retain this bill till the due date. Now we have to calculate the amount. See, the amount of the bill is, we will give a working note here. Working note. Amount of the bill is 10,000. The duration of the bill was 4,000, but X has kept that bill for 1 month with himself only. So now 3 months only left in the payment. So bank will charge only 3 months interest. And the rate of interest is 18% per annum. It is given in the question, 18% per annum. 18 upon 100 multiplied by 3 upon 12. 3 upon 12. So now in short it will be now 10,000, or you can cut zeros. So it will be 100 multiplied by 18 and multiplied by 3 upon 12. This 3 upon 12 will become 4. 1 upon 4, 100 multiplied by 18 and it will be divided by 4. So it will become 25 into 18. 25 multiplied by 18. So if you will multiply 25 by 18, it will become 25 8 is 200. So 2 zeros will be there. And then 25 ones are 2,700. 25 into 18. 25 it is a 200. 270. into 18. It will come 450. It will come 450. So now bank will deduct 450 rupees from the total payment, and rest of the payment will be handed over to X. So out of 10,000 minus 450. So if you will deduct 400, it will become 9,600, 9,550. 9,550 you will get now. So in bank you will get 9,550. Discounting charges will be 450, and the bill amount will be total 10,000. This will be the journal entry when X will actually get the bill discounted from the bank. Now, one more thing you have to observe, that suppose I am X and you are Y. I was having that bill and I have discounted that bill from bank. I have given that bill to bank. Whether you will be able to know anything practically about that, I will not be informing you, because there is no need of informing you that I have got this bill discounted from the bank. So practically Y will not be knowing anything about that. So Y will not record any journal entry for discounting of the bill. Y will not record any journal entry for discounting the bill, discounting of the bill, because he don't know about the transaction. First thing, also he is not concerned with this transaction. He is not concerned with this transaction. That's why this transaction has been done only between X and bank. Y will not be recording any transaction for this. Now the due date will come. Now what will be the due date? The bill was written on 15th March for 4 months. So 15th April, 15th May, 2 months, 15th June, 3 months, 15th July, 4 months. 4 months have been completed. Now 3 days, 16, 17 and 18. So 18 July will be the due date. So now on 18 July, first thing, who is having the bill? On 18 July, the bill is with whom? The bill is now with bank. The bill is now with bank. And on 18 July, bank will present the bill for payment, because now payment has to be done to bank. Bank will present the bill, and Y will make the payment to bank now. So now the transaction is between Y and bank. Now the transaction has been done between Y and bank. So because X already